Make sure we're on the same page. Okay, let's roll on crude here. Here's our entry short. Make sure we understand. Let me blow it up for you so you see it. What we try to do is this, guys and gals. All right, we got market profile here in the red. This is a high value area. Low value areas in the green. LVA, low value area. When we get a trend change on JaySignal like this, a big red thick triangle will show up, meaning we're in a downtrend. So you're automatically going to look for an ABC short. There's your breakdown. Look for a retest. And then we're going to look for an arrow short. It's an arrow-based system. Arrow-based system. So what we're going to do is we're going to look for the fib dots to fire off first. You're not going to get any fib dots against the overall market, meaning it will not counter trend trade this black line on the new signal or JaySignal update. It won't counter this black line. So once you retrace on your own Ninja chart, you're going to have your speakers on. Your speakers can be on, right? This arrow, once this fib dot plots, I made the audible alert start going off once the fib dot starts plotting. The fib dot will be with trend. It's going to start chinging or chiming in on your own Ninja charts. Get ready for a short. Once that happens, you wait for an arrow. Once the arrow pops up, that's your entry signal to the exact bar. What you can do, you can sell the ask. You put a limit in, sell the ask. It'll be a premium of 1 tick, but it's better than a market order. You can sell it right here once it turns a red arrow. That's your entry candle. You can have a hard 13 tick hard stop in the market just in case this market explodes back up, a catastrophic stop. But your overall stop is this. Here's your entry candle. Entry arrow. Once you enter the trade, you can have a smaller stop. There's your entry right there, the arrow. If price reverses and goes back up and closes outside my black line right there by a body candle, wicks don't count. Wicks don't count because it could try to M top or W bottom on you right here at the black line. If it does close outside that, you can close your position out and I have a 13 tick stop, maybe have an 8 tick stop, 9 tick stop, 10 tick stop, save 5 ticks on the trade, save 4 ticks, save 6 ticks. That black line, stop line's automatically going to plot right when that arrow pops up. You have a very limited risk on all trades. That is a huge trade in crude based upon a small stop like that. Okay? So there's your entry. There's your stop level. Your exit are the symmetry dots. The first set of symmetry, you should be about 50% of your position. I would front run it by 2 ticks. If you see symmetry in here at 160, I would do 162 as a limit order. It likes to come down with it a couple ticks and bounce. 50% of your position here. If you're doing 4 contracts, bail 2 here. Second set of symmetry, bail 75%. Third set of symmetry can be 100% target, or my rollers over here. Whatever you want to do. That's a nice big short this morning. Gerald, go over to gold. Well, actually, go back to crude oil real quick. Sorry. I'll explain something. Go back to crude. This is the third. What I'm trying to do is catch a third wave down on Elliot wave. This is an impulse wave. If anybody know about Elliot wave, this is an Elliot wave, impulse wave. If I look at this swing high, this is an Elliot wave pattern. So when the arrow pops up, I'm trying to get into that third wave. You know anything about Elliot wave? The third wave is your longest leg. That retracement after this trend change should be around 62% retracement. It was right at 62% retracement, indicating third wave Elliott wave. Here we go. Longest leg, $400 per one contract, over $400 just like that. Go over to crude, gold, Gerald, real quick. Gold. Gold. Let's take a look at it. Gold, it caught a 5 Elliott wave impulse wave up, and it's huge. There's your green arrow. It got outside of HVA. HVA says the market's going to get powerful to the upside by the first arrow long. There's your break outside of HVA. I look for an ABC long. Look for the first arrow long. There it is. Look at my defined stop on gold. You can't get prettier than this. You can sit down and go through 1,000 charts and not get prettier than this stop line right here. My stop line that automatically came up with this green arrow is right at my big black stop line also, my catastrophic stop line. Look at that. When they're that close, you got yourself one heck of a trade because you know you don't have a maximum 13-tick stop anymore. You may have an 8-tick stop on this at a potential 100-tick move. $80 risk to make $1,000. It happens a lot like this. That's why you see the big move. But here's an arrow-based entry. Here's an arrow-based entry. Either one, they both work. They're 2 for 2. If you got in this one, you can scale 50% of your position there, 75% of your position there. If you got in this arrow, bail 50% of your position at the symmetry dots here, and bail 75% here. Here's your overall target, 1304.70 on your last runner if you want. Right there. Use the symmetry dots to reduce risk on the way up. So what I've done is I got an arrow-based system that tells you the exact arrow to get in. What I've done is these Fibonacci dots will not go against overall trend direction with this black line. The arrows will only pop with trend, and the Fib dots will only pop with trend. What I've done also on your own Ninja charts, these blue dots will pop up, an audible alert will pop up on the blue dots when they're coming up. And then you get in an arrow-based system. Okay? The first retracement after a trend change, the best. Not the second or third like crude oil is doing now. The first one is the best. This is the first retracement because you're trying to get a third leg, guys. This is your first retracement. This is your first retracement. You're trying to get a 3 or a 5 leg. The first retracement's the best. You got to put yourself in a position on the first retracement's the best with the arrow, especially if you just broke out a market profile or broke inside HVA. If I look at gold right here, I just broke outside of high value area. First retracement after a blue triangle trend change, there's your arrow. Huge trade. Right? Another $400 trade just like potential like gold. Now go over to crude oil. Go to crude oil, Gerald. That broke outside of HVA. Look at crude oil. We broke inside of crude oil. Look for an ABC short. So both of those were qualified Elliott waves with the arrow because of what? There's the arrow. Because it's the first retracement after a trend change, and it was just broken inside a market profile. You'll see hundreds and hundreds and hundreds and hundreds and hundreds of trades just like this. And they match up perfect with market profile and Elliott wave. And you'll see the arrow match up perfect. Trades that are already down after the trend change, your second and third one are going to be weaker in nature. Why? He's going to be weaker. Why? Because you're not catching the first retracement. Make sure we understand that.